Well, what is going on, guys, and welcome into the video. So let's take a look at 5 stocks that I've been pouring 6 figures into because they just kind of came crashing down to earth, and I cannot believe we were able to buy these stocks at these prices. It is wild out there, but you have to be willing to pull the trigger when opportunity comes, and man, have there been some massive opportunities out there you could have pulled the trigger on. So I will tell you which stocks and why I like them, and the price I paid or my price target for each stock. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And make sure you are subscribed, as there are about 35% of you that regularly watch but aren't subscribed, so you may miss videos, especially if you don't have that bell turned on, so make sure you have that on too, or you could be missing my videos. And hopefully YouTube is listening to us creators and you guys the viewer to clean this up, and all the spam gets cleaned up too. I mean, I like spam as a kid, but on here it's just gross. And let me know which crashing stocks you've been buying or looking to buy down in the comment section. So what criteria am I using to determine these 5 stocks from the thousands that are on discount and from the 10 or so that I have been personally buying lately? First, they must be at least 25% below fair value. This is where valuation comes into play and why I harp on it so much. You cannot know if a stock is undervalued or not if you don't do an actual valuation. A stock being 80% down from its all-time highs or 52-week highs or whatever, or setting new 52-week lows is not relevant to valuation. It means absolutely zero. A stock can be 80% off its high last year and still be massively overvalued. And yes, there are stocks in the market right now that are in that boat, and unfortunately some of them are retail favorites. Second, they must have massive future growth ahead of them. And I'm sorry, but most value stocks are still overvalued, and the truth is, for me, I own a ton of stocks that have turned into value stocks over time, which is great for me as I'll happily take the slower growth for the dividends because I have such a great cost basis. But I'm not really looking to add too many more of them either at these prices. I want a stock that can see revenue growth of at least 10% or more the next year. And third, that's not 3. Anyways, and third, they must be profitable already. Yes, the growth prospects are better with stocks that are still early in their growth stage and not profitable, and I'm going to cover those in a different video. But right now, in a crash type scenario that we're in the middle of, Wall Street just gets stupid and gives you some incredible discounts on stocks that can basically buoy your portfolio during rough times. And how many people's portfolios were down last year because the high growth names declined the entire second half of the year? I think a lot of people are in that boat. But we're going to look at companies today, due to the situation that they're in, they were able to actually help push my portfolio to a roughly 40% gain or so last year. So I'm happy to add more stocks like this that perform in both good and bad markets, but now are on stupid discount, which only happens in a crash type scenario. It didn't happen last year. It's happening this year in this basically once in a decade type scenario. These are the type stocks that help you during these rough times in the market. Now, obviously in crashes, nobody's safe, but during the normal rough times and corrections, these are the type stocks that help your portfolio look really, really nice. So on to stock number 1 that has just crashed and is on crazy discount, and that is Google. Google has been steadily and quietly getting cheap, and then stupid cheap despite being a great business, great management, and having an undeniable moat around all that. But Wall Street has treated it like nobody is going to do any advertising next year, and nobody's going to watch YouTube videos or use Google search either. It should have honestly held up much better than it has, but this is what Wall Street does. It just ignores great stocks in favor of whatever the hot trend is at the time, whatever, I don't know, it's Wall Street. So I have added aggressively the past few weeks, and it got down in the low 80s, and we have buy alerts going off everywhere in our group, and I will continue adding to this stock as we move forward, as it's still on a great deal, and I cannot believe Wall Street is still punishing this stock. Wait, what is that? What is going on? What? Wow, whoa, that was crazy. I don't know what happened there, sorry. Okay, so on to stock number 2 that I have been buying up huge, and that is Amazon. I was able to snap up shares in the $80 range for freaking Amazon. And I got it, guys, they overextended and overhired and are now having to lay off workers. But anyone who has followed this stock knows this is how they run the business. They pour everything back into the business, buying warehouses, more automation, more delivery trucks, getting into new opportunities altogether, and obviously hiring more people to stay ahead of the demand. The question you got to ask yourself is, are people going to buy more or less stuff on Amazon in 5 years? And I'm sorry, this isn't JCPenney's. This is the company taking all their market share. Actually, I think JCPenney's is already gone. Anyways, they're the one taking the market share from a lot of these retailers that are struggling. So in my mind, they will rapidly fill all the overbought warehousing space that they have. And when the growth engine basically goes back to hitting that overdrive period again, this stock will recover and thrive, in my opinion. So the third stock I cannot believe I have been buying like crazy and getting so cheap is PayPal. Now for me, anything under $100 per share is just ridiculous. And I was able to buy this stock at the beginning of November for $67. And honestly, I've been steadily adding to this stock every time it hits the 60s and will continue to do so if I continue to get that deal. Now they kicked up some controversy with a draft policy that didn't go into effect, but got leaked, and then it actually honestly got political really fast. And it turns out most of the components that everybody was all worked up about were not new policies, but have been on there since like 2015 or something like that. So that gave me a kind of a short window of opportunity to buy more shares at $67 again, and those shares are up over 20% since then, making it one of the best buys of this batch. Sometimes news like this gives you a great deal on a great stock, and that's exactly what happened in this case. But wait, there were still more deals to be had, but not without a little bit of controversy. So on to the fourth stock that amazingly has performed the best or second best since my last buy, and you aren't going to believe it, but that is actually Meta. That's right, the stock that basically fell out of the sky into oblivion is one of the best performers now over the past month or so. Now I agree, they have to shift the business again if they want to get back on track of being one of the big 5 stocks that are continuing to grow, and they have done it successfully before when everyone else said they were done and they couldn't do it. And I also agree that they may have been spending too much money on the metaverse, and with the layoffs and the letter Zuck released, that fact was finally acknowledged that that's exactly what happened. I wish he would have done it on the earnings call instead. It probably would have saved him a few $billions. And wait, no, actually, I'm glad he didn't because it just gave us a ridiculous opportunity with this stock. It was not trading at a growth multiple, not a solid company multiple, and they are still trading at even cheaper multiples than a freaking value stock. Oh yeah, they're still just basically printing money despite all this mess. Even if the metaverse is a huge flop, they are still a better growth company and more profitable than any value play out there. You literally are getting the company for free at this point. So I was able to add shares at $92, and honestly, some of our members got some of those shares in the 80s. And we are all very happy with those buys given how well Meta has done since then. All right, so on to the final stock, and that would be Tesla. I don't care about all the Twitter drama or that Elon seems to be intentionally poking all kinds of bears, and I'm not worried about him biting off more than he can chew. This is all part of the journey with him, and we discussed that in depth right up here in that video if you want all the details on that. This is not the first time he has started something Wall Street didn't like, and it's not going to be the last either, guys. I'm sorry, it's just not. He is able to manage all the different companies he has right now, and somehow he manages to do it quite well. Can you name another company outside of Apple that has executed more flawlessly than Tesla has? I know I sure can't, so I was very happy to add shares in the 170s, and if Wall Street wants to give me shares at 140, 120, or whatever, I will happily add there too. It's not like this is a company that is struggling or seeing demand fall off a cliff like, our boy Gordon Johnson says, or anything else like that. It is simply a stock that is out of favor for now, which means opportunity until the next rocket ship takes off. So hopefully this was helpful, and if you don't know how to get a price target or how to do a valuation and want a step-by-step process for doing that, building wealth, and you want direct access to me and much more, remember to check out the pinned comment down below to become a member and at least look at everything you get. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.